500 as we get ready to trade. May week 1, 2022, a brand new month starts us off on Monday. We also have the Fed this week on Wednesday. The statement will come out at 2 o'clock. Market's looking for at least a half-point hike. Some chatter that we might get a three-quarter-point hike or a half-point hike with some language in the statement that reminds us that they can raise anytime they want. They can make another quarter-point raise sometime between now and the next meeting if they want to. They don't have to wait for these actual meetings to make these changes to the interest rates. So we'll see how the market reacts to any or all of those things. Okay, let's start off looking at the intraday chart from Friday and just go over some classic trading moves that happened here and things that can help you out and give you entries and so forth into options during the day. We started off setting our initial balance period, and our first high of the day failed miserably right against the 20 line. Tried to chip its way into the gap back to Thursday's close, failed, and rolled over from there. And shortly after the end of the initial balance period, we broke down below that low, broke down below the 200 line on our intraday chart, the 200 period line. Tried to make a move back up into the initial balance period, failing against these lines once again, and from there just rolled over the rest of the day. And even over here, going towards the final 2 hours of the day, this move back up that looked above the 20 line and failed was yet another short entry that could have gotten you a nice move into the end of the day if you were around trading it. So food for thought on all of this, people. You got to look at this chart, look at this intraday chart, set these certain things up, and watch these simple things, and they will get you in and out of some nice option trades if you know what you're looking at. So that was just a little going over of that. Let's take a look at our roadmap and see the carnage that happened to us on Friday here. I warned you about looking for a new closing low for the year, and we certainly did get that. Here was our closing low back here in early March, 41.70 and change. And you can see that we had been holding that even all this week, and then busted down through it on Friday to end the month, and just running stops and selling off to a brand new Q2 and April low into the close there at 41.24, and a new closing low for the year at 41.31. So tomorrow we're looking for this closing low to stick and hold as our closing low for the year, or if we make a lower one, then that's going to be our new closing low, and we keep going from there. We now have a fresh and written in stone now halfway back for the month of April after walking this down day after day after day with lower and lower and lows all month long. Our final April halfway back winds up here at 43.59. This is actually rounded up from 43.58.86. I just rounded it up to 43.59 for the sake of sanity. So this will always be our April halfway back, but as long as this low holds us in Q2, it is also our Q2 halfway back. I could see this as the point that we bounce back to if we are going to hold this low come Monday, or even if we make a little bit lower of a low and settle the score with this ES 2022 low that's never been resolved. ES hit a low overnight going into this trading day here back in February of 41.0150. And then when the market, it started to bounce in pre-market, and when the market opened, we never got down all the way there to completely resolve that level in the light of day. With ES, it's important to do that because ES is just an offshoot of the S&P 500. The S&P 500 is the parent, and we haven't resolved that level in the light of day in regular trading hours with that low. So to do that right now with the current spread, maybe we get down to around 41.06 at best case scenario, maybe closer to that 41.01 level, worst case scenario. And if we just flat out break down below that level, which we often see, maybe we've got to test 4,100 flat on the S&P, and that'll take us down into the 4,000 handle on futures. Or maybe we've got to go even lower still. Maybe we've got to get all the way down to 40.80 on the S&P 500, do our 80 handle rule thing. Could be 80 to 89, whatever, and reverse out of there and come on back up. So food for thought on that. We would still be looking for this 43.59 in the end as our rallying point overhead. In order to get there, we would have to take out Friday's high. Well, let's start off with something even more simple. Friday's halfway back. Then Friday's high. Our 10-day simple moving average is probably going to be falling right down in here, equal to around where Friday's high was. So get through Friday's high and the 10-day, and then take out last week's high, which was set on Thursday with this sort of head fake bounce that we had on Thursday. Get through all that, and then we go after 43.59. I don't see us getting much higher than this until we hear from the Fed. We do have our 20-day and our 50-day, which you can see are going to go into a bear cross, if not Monday, then by Tuesday. So maybe if there is a bounce going on, the market is going to be trying to treat this as an oversold event. If we were to get through this halfway back, we have to close above the 50-day and the 20-day, and then move on towards this other set of simple moving averages, and then this failed bounce here from April week 2 or so. Back a couple of weeks ago of this failure right against the 100-day. Get through that, and then we would get back towards this level up here where the March high and the actual bounce high for the year from the low here was. But that's way off in the distance. I would just be focused on this 43.59 for now, and then the 50-day and the 20-day just above there. Let's talk about what happens if we go lower, because I dusted off this monthly chart and brought this out for you on Friday. And talked about how we haven't closed a month below 4,200 since all the way back here last April in 2021. Sure enough, what did we do on Friday? We closed the month of April below 4,200, and we even looked below and closed below the 20-month simple moving average. So that's a 20-month low in the eyes of the market here, based on that. So I could certainly see that if this is just the beginning of the end here, I could certainly see that the market might take this candle or a portion of this candle and double it down from where this 20-month moving average is. And where would that take us? Maybe about down to here, right? And where's down here? Down here are the lows from last year. The lows in Q1. March low, February low, January low, which was the low for 2021. Maybe we've got to take back all of the gains of 2021 before everything is said and done and back test those lows. Once again, just food for thought. How do we get there? We have some steps that we would have to get through in order to get that low. Let's talk about that now. Let's go to our simplified chart with our brand new bear fork that I introduced to you in last weekend's video. Since we have broken down and clearly busted down through the bottom of our bull fork, I still have it on the chart here just for reference, just so you can see what a miserable failure we've had and how this effort to sustain a bounce has failed, and now we're breaking down below this bull fork and heading towards the median line of this bear fork. Well, look what we did at the median line of this bull fork. We took a nice look above that at our bounce high and failed, and boom, came back down through it. Well, maybe we're heading towards a look below the median line of our bear fork, and maybe we're going to rally out of that. What is right there at this median line? This big gap that we've been talking about since, I don't know, since the beginning of the year, right? And now we are in the month of May. We're 5 months into this market for the year, and we still haven't filled this gap that takes us back to Q1 of 2021. This gap that fills at 39.72, this April and Q2 open of 2021 at 39.92. So our median line is passing right through this over the course of the month of May. In fact, only until about the middle of May, and then it starts breaking down below it. So the longer it takes to get to this median line and take a look below it, the deeper the cut may have to be. So what happens if this gap is just nothing? This median line is nothing. If we're going to go much lower, maybe even take a swipe at the bottom of this bull fork. Well, I don't think so. That would take us to a much lower low than 2021, but maybe what we would do is look below it and walk down the median line over the course of the next few months. And that's what would take us here to those lows from the beginning of last year, starting with this low that was made in late March, around March 24th, March 25th of 2021 at 38.53, a great 80 handle rule level. This low was significant because it was one little stab lower, a look below the 50-day simple moving average, but a failure to close below it. And then this launched us into this rally that took us all the way to September. So from March to September, just one big, long rally until we had this sell-off that took us into the Q4 low and began forming our bull fork that we just broke down out of. So if this gap is not enough to feed the beast, this is our next target, 38.53 or so. And then if that fails, then we go into this March low here. This target, the 2020 close lines up here, and then we get into February and January lows. We would go back to the monthly chart from there. We don't need to necessarily look into the details of this stuff. We would be looking at where the option volume is. We would be looking at where these levels are and so forth from those monthly lows. And that would be that. Okay, so food for thought on how we would get back here by way of this gap, by way of the median line, and starting off with this 38.53 level here. If that doesn't hold us open, if we can't hold a low against that, then this market wants to test the entirety of the lows of 2021. So basically, giving back that whole 2021 rally, because now the Fed is raising rates, so no longer having the Fed put. That would be the statement the market is making there if that's the way things go. Okay, have a great rest of your Sunday. I hope this video helped you out. As always, good luck and good trading.